How much of a factor is Chinese protectionism in this sector right now?
The Chinese don't really want to control these industries. Right now they have gotten themselves into a trap where, thanks to globalization, manufacturing has shifted to the lowest cost jurisdiction, and that's created a one-way trade, and they're sitting on a $2 trillion foreign reserve surplus, and the American economy has been gutted with the end of the real estate bubble and the end of mortgage securitization. So credit-fueled consumption by a country whose economy, manufacturing base has been hollowed out, that's not going to really help China in the long run. So they're focused on building a domestic economy and building a trading relationship with all the other countries in Southeastern Asia.
Do you think, John, that rare earth should be considered a strategic metal?
Well, what does it mean to be a strategic metal? In China, it means there's no foreign ownership allowed of rare earth deposits. So it's all run in-house, and ultimately every Chinese mining company is controlled by the state. In Russia, there's only one metal which is not declared a strategic metal, and that, ironically, is silver, which means, again, foreign ownership is restricted to 49%, and if there is a so-called military emergency, the government has the right to expropriate any mine in Russia. So that's what it means to be a strategic metal. Are we going to do that in the West? No, that doesn't make any sense at all. But in a more general meaning of strategic and critical, we do need to ponder that, yes, this is a very important aspect of these metals, and we need to look at where our manufacturing base needs to look at where are we getting these things, and if there's a problem with permitting and so on, or even with these metallurgical processes, can there be funding for helping crack the R&D problem that's associated with it? That's what the governments in the West can do to help solve this problem of all of this stuff right now coming from China.
How much capital is available for companies in this sector?
There has not been a lot of capital coming into this sector. Now, one big financing did happen, and that was Lynas and its Mount Weld project. They had $300 million and $400 million in combined equity and debt lined up last year, but the plug was pulled in January after the crash, and the company is in the midst of construction, and all of a sudden it collapses from $1 to 10 cents and is sitting there. The Chinese come in and say, okay, we'll put up half equity and guarantee the other half debt, and we want 52% of the company. And the company said, of course, yes, wonderful, we can get this stuff back into production. Then the Australian regulators woke up and said, whoa, 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 you can't do this. You can't control our rare earth industry. So they said, you have to be below 50%. So the Chinese said, well, then we're out of here. And the stock price was halted. But J.P. Morgan rallied institutional and retail investors, and they just did a $450 million Australian equity financing, which basically takes care of the rest of the construction funding needs. So the money is becoming available.
And what about forward selling of product or potential product? Can companies like Quest and Great Western and so on seek these deals with possibly majors or other interests in order to fund these projects?
Well, the standard line in the rare earth business is you cannot get production funding until you have an off-take agreement. However, what does an off-take agreement consist of? If you have the price fixed, then you're in serious trouble of having your costs end up outstripping the price, and you have no participation in what the future price will be. There is no real future market where you can independently forward sell rare earths. You basically have to go into an agreement with somebody and say, we will supply you perhaps at what is the market price. But again, what is the definition of a market price for a commodity that's very opaque and isn't traded through any price discovery mechanism?
Yeah, you can't look it up. What aspects of rare earth projects should investors be looking at?
Well, the first thing I look for is what is the rock value based on the published grades. And that's not easy. There's 15 elements, and there's you have to do a complicated spreadsheet, which I do, and I pour these numbers in, and I use a 4-year average price, which is debatable whether this is too conservative or not. And then I see, what does it all add up to? Is it $200 rock, $300 rock? The higher, the better. And the other thing I look for is, what's the tonnage footprint? If we're dealing with a 2 million ton deposit of $200 rock, that's a $400 million in the ground situation. That's not likely going to be developed because it'll still cost a lot of money to develop it. It'll cost a lot of risk capital to solve whatever metallurgical problems are associated with it. And that's a really key thing. You need the large prize. If you're going to spend $10, $15 million on metallurgical studies and pilot plants and so on, you want it to be applying to something that's got $5 to $20 billion of this stuff in the ground. So I look for the large tonnage footprint, and then I look for the rock value, and then I also look for distribution of light rare earths versus heavy rare earths, because it's the heavy rare earths for which there are a lot of new applications evolving, but yet in terms of volumetric supply, they represent only 3% of the current 125,000 ton demand that the world consumes.
So you look at size, it sounds like you look at grade there as well, and you look at the distribution. What about cost? How much does it cost to bring a project, a rare earths project, through development?
All of these projects are going to cost a fair amount of capital to bring to the feasibility stage, unless it is an attempt at a traditional small-scale type operation, such as Great Western is attempting by putting the old Steenkamskraal deposit in South Africa back into production. The problem with these deposits is they are not going to be long-lived, and they're not going to take care of the long-term supply needs of the market. I would say that if you are sitting on a major rare earth system and you can see 30, 50 million tons or more, such as the examples of Avalon's Nichelacho project in the Northwest Territories and Quest's Strange Lake project in Quebec, Labrador, these are very large systems where you can see, in the case of Avalon, we already have a resource estimate that shows there's $15 to $20 billion worth of $200 plus rock in the ground. To get from properly delineating that to having a pilot plant supported flow sheet for the metallurgical process in place, you are talking $30 to $40 million investment. And that's actually become the norm for any large-scale project. Major gold deposits, major base metal projects will cost $50 to $100 million to bring to the feasibility stage. And when you look at a project like Galore Creek, Teck spent $400 million to find out that this thing is going to cost an enormous amount, way more than they ever expected to put in production. So compared to these very, very large base metal deposits, the costs are relatively small, but it's not like your old-fashioned million-ounce gold deposit where you may get away with spending $10, $20 million to bring it to a bankable feasibility study.
What's the potential for continued growth in this sector then?
You might say, well, right now the market for these heavies is very small, and if we get both Nichelacho and Strange Lake into production, the world will be flooded. But what will happen instead is that as industry sees, oh, we have all this stuff, this lutetium and this dysprosium and terbium and all that stuff available, now we can make these things, which before we couldn't, because if we wanted to make a lot of it, we would have sucked up all the existing supply, which was really a byproduct of these other lighter rare earth deposits.
Yeah.
So again, there is risk that maybe this won't happen, which is again a reason people are very cautious about these rare earth projects. To be an investor in these rare earth projects, you have to have a certain macro outlook about how you think the future will unfold, and you need to connect the existence of these rare earth deposits going into production to that future. If you are skeptical about that, if you're a total oil bug person who says we have enough oil to take care of everything and so on, then you would not really be interested in rare earths, because you will not see the demand grow exponentially over the next 10 to 20 years.
John, you've really taken a complex, very complex subject and made it a lot clearer for myself, and I imagine a lot of other investors. I really appreciate your insights. Thanks for being here today with us.
You're welcome.
It was John Kaiser from Kaiser Bottom Fish Online.